All right, folks, despite a temporary oil shock, the post-war American economy is going to flourish, and that's the subject of the riff. It may not be great, but the U.S. economy right now continues to expand, even with war-related energy prices spiking and a certain amount of anxiety in the air. I don't deny it. But today's S&P Global Composite remained in growth territory above 50 on the index. Manufacturing actually went up along with new orders. Input prices did go up too, as the temporary effects of near $100 oil are being felt, even if it's only for a short duration. I'll repeat my minority view that we're not going to get a big permanent inflation jump simply because the M2 money supply, which is the ultimate inflationary cause, is growing only around 3.5%, and it's well below its historical trend. Now, during the Biden years, that measure jumped to nearly 30%, and that's why cumulative Bidenflation went over 20%. Unless this war lasts another year, it's still highly unlikely that we're going to get a big inflation shock that sticks. Now, stock markets only off a few percentage points, and profits remain very, very strong. So, at the risk of being wrong, I still believe investors should be staying out of oil and going into stocks. Buy the index, hold it for 100 years, maybe 200 years. Meanwhile, productivity continues to surge, trending around 2.5%. It's a big number. We're in the throes of an AI, quantum computing, high-tech revolution that's going to drive our economy for many, many years. Labor markets may not be booming, but they don't have to, with record self-deportations and criminal deportations and a border that's closed to illegal immigrants. Weekly unemployment claims, meanwhile, are at rock bottom. The unemployment rate's 4.4%. But business is in a capital investment boom. Factory construction is roaring. Wages still running ahead of prices. Consumers are still spending. In fact, consumer tax rebates and tax cuts in the first quarter appear to be offsetting the temporary tax hike effect of war-related gasoline spikes. I get that. The Atlanta Fed's GDP now, for the first quarter, tracking about 2%. It may not be fabulous, but it's not bad considering energy prices and the war. Now, Mr. Trump's one big beautiful bill of tax cuts and deregulation and drill, baby, drill is still going to provide big tailwinds in the post-war period. His mission to destroy the radical Islamic extremist regime in Iran is changing the course of history, and it is bringing new freedom and prosperity to the Middle East and the entire civilized world. As always, America will lead the way. All right, that's the riff.